Hey everybody, welcome back. In today's video, I want to have a look at Ethereum, but before I do, I first want to thank today's sponsor, FairDesk. FairDesk is an exchange, and if you're interested, you can click the link in the description for a deposit bonus and my copy trade. I make a trade on all the alts I review, so if you don't want to miss that, go check it out. Now, getting straight into Ethereum, first of all, this chart may look different to you if you're familiar with the Ethereum pair. That's because we are looking at the logarithmic version of Ethereum US dollar. And what that basically means is instead of looking at Ethereum on a price scale, which we are, this is scaling price. It's just not scaling price evenly, it's scaling percentage moves equally. So usually you might see Ethereum, every grid might be $100 moves, so it will be a range of 100 for each grid. In this case, it's a percentage, so it might be 5% each grid or 3% or whatever it is. It depends how much I'm zoomed and all this and that, but that's sort of how we're going to be looking at it, and it basically gives us the ability to see Ethereum in a much more macro way instead of where prices are scale. We often have to sacrifice detail for a bigger picture, and with the logarithmic you often don't have to do that, because we can see very clearly here where Ethereum had its bull runs and where it had its bear runs. And if we quickly switch to US dollar, we can see that these moves here aren't very big. In June 19, in May 17, they don't see much. But if we go back to logarithmic, you can see that these were actually, June 17 was a massive move. It's one of Ethereum's biggest moves percentage-wise ever, and sort of same over here. So it gives us a great way to visualize the asset on a macro scale, and that's what I want to do, because I haven't actually made a solo video on Ethereum on this channel yet, which kind of surprises me, to be honest, although I have looked at it in a lot of other videos. So getting straight into it, Ethereum is at 1,500 US dollars, close to 1,600. It sort of stayed within this 1,800 to 1,400 range for the most part of the year. We can see in January when every coin pumped basically at the beginning of the year. We had our delayed Santa rally, our New Year's rally, and for Ethereum it stayed well above its yearly open, which is about 1,200 USD. Like I said, we're at this 1,550 USD, having come down from a local high of about 2,100 USD. And you can see before this, our most recent bull run, we came close to breaking 5k, but ultimately we didn't reach it. And we've been moving down ever since, naturally, because we've been in a bear run. Now, and of course, as you can see, there's just basically been lower high, lower high, lower high, lower high, higher high, lower high. So, we've sort of done a little reversion and then reverted again, if you will, in my opinion, because I do think Ethereum has a way to go, because I will pull up a very useful tool in a minute that will help me. In fact, I'll pull it up now. This is called the logarithmic regression line, or band, whichever you want to call it. And it basically shows where Ethereum put in its lows for its cycle and put in its highs for its cycle, and it sort of maps itself compared to this. And it does a great job of showing us where Ethereum is likely to go during certain parts, during what part of its cycle it's in. Now, currently we're in its bear run, but we're also in this sort of 2019, late 2019 stage. Currently, 2023, if you believe in the 4-year cycle, minus 4 years, that's 2019. That's roughly where we are. And we can see it's actually October that we're in. If we have a look at October, we can see that we sort of traded up on this white line here, around here. This is what we did. And if we zoom in today, we can see that currently for October, we've actually, we haven't been doing that at all. We're much lower than where we were historically here. Now, naturally, these things, they don't play out exactly the same. Just because we were October over here, just because we were playing along this line, doesn't mean we have to do the same in October over here. And naturally, we haven't. I mean, if we go back to October 15, we can see, well, Ethereum was a bit too young for it, and it's not even sort of fitting this curve. But there are others that would sort of spring And in fact, I'll draw one myself just to sort of maybe paint a basic picture. But anyway, what I wanted to get to basically was that last cycle for Ethereum in early 2020 in March, Ethereum put in its bottom. Basically, second week of March, it put in its bottom, and that was at $85. Okay, we are now coming close to that time, and now I'm not saying that's when we will bottom, but I do think we're on a similar trend. I mean, it does look that way. I mean, we had our peak. We only wicked into this red ever so slightly. We didn't even go into this area. So we sort of had these play out instead. In fact, you could say actually this bull run here has been basically one tier below the previous bull run for everything. This wick here is in the yellow zone. Our red wick doesn't quite break into the red, and the wick after that is in here. Now, you could argue that this wick is this wick. You know, it's this, that, and the other. It's not really that important. Basically, we didn't perform as well percentage-wise as we did in Ethereum's first bull run, which is fine. Ethereum still put in higher highs, and ultimately, that is what's most important. That Ethereum is improving on itself. Just because it's not meeting its grand scale of improvement that it did its first bull run isn't too important. It's still going up in price long term, and I do believe it will continue to go up in price because there is so much demand for Ethereum usually in the bull runs, being the second biggest market cap cryptocurrency. But again, back to current day, we can see that we are below this sort of green support band. And if we check how long we were in for here, we can see that we bottomed 69 weeks after we entered this zone. We came into this zone and it took us 69 weeks to put in our low. If we check when we came into this zone here and pull it out, we can see that we've already gone 70 bars, basically. And we may have bottomed out, we may have potentially, but we can see we would have bottomed out here at 1,000 or even 900. That would have been our bottom. But if we actually end up coming down to this level, it will only be at sort of 1,000, 1,100 US dollars. So again, it's kind of, maybe we have bottomed out. It kind of depends on what you want to believe, because we've come down from this zone, and actually if we check again, we spent 52 bars oscillating within this green range. If we come back up here, we spent 62 bars oscillating within this range. So you could argue, well, we've had our time in here. That's what we've had here. And then we break down below at around, and 20 weeks later, we put in our low. We've had something like 20 weeks outside this, 15 weeks afterwards, we put in our low. We've had 8 weeks. Could we put in a low? It's very, very possible that we come down and test this level again, but that wouldn't even be our cycle low, because 900 would have been our cycle low. I'm going to turn this off very quickly just to prove that point out. So even for Ethereum, if we do wick down to that, regression line that was sort of the deep accumulation period or range, we would still not be at our cycle low of 900, which I think is acceptable. However, it does sort of, it would sort of point out that Ethereum has got pain to go, and if Ethereum has pain to go, it's most likely not going to perform as well as Bitcoin. And if we swap to our Ethereum Bitcoin chart, we can see that in these last few weeks where Ethereum on its US dollar pair has broken below this regression support line, our curved line, it broke it into or just above the red zone. We can see in this same time period, Ethereum has broken below a key support on its Ethereum Bitcoin pair. And this sort of scares me a little bit, because it kind of says that Ethereum is wobbling right now, to be honest with you, and could easily break down, and Bitcoin could claim a lot of space on Ethereum, dominance-wise and price-wise. I mean, if we break below this point here, there really isn't much more of a support up until this 0.052 level. And I think ultimately Bitcoin dominance does have to go up. We can see, I wanted to point this out as well. If we draw a fib from Bitcoin's sort of last cycle, from 2016 to 2020, mid 2016 to mid 2020. I know that's not from peak to peak or whatever, but it's just how I lined it up. We can see if we draw a fib from this level, Bitcoin peaked during that bull run, during 2019. What am I saying? Not 2019. Dominance peaked in 2019. So Bitcoin would have had the highest market capitalization. It doesn't mean Bitcoin was doing well. Bitcoin was doing poorly at this point, but the dominance peaked in mid 2019. If we draw the same regression line from the start of this year and draw it down to our lows again, which are roughly in the same area, we can see that this same Fibonacci level that we have here, that we peaked at last time, this 0.61, this 0.62 level, if we draw that again, it brings us up to 60% on the Bitcoin dominance pair. It's very possible we've bounced off this support now that was a very strong resistance. When this happened last cycle, we sort of just rocketed up. I mean, we had a big rocket. We oscillated around a range like this for a while. We spent, let's find out how many days we spent. We spent 280 days wobbling around in this range. So far we've done half of that, give or take. So could we see another 100 or so days until we finally start claiming back the dominance? Where does 100 days take us? It takes us February, March, not even February, January, February sort of time. A few months before the halving. Again, where Bitcoin does claim its dominance back, because the market does fall, but Bitcoin falls the least, because that's usually how things go in a bear market. Again, this is all due to lack of liquidity. Liquidity is being sucked out of crypto because it's being sucked out of everything, rate hikes basically. And money tends to fly out of high risk assets into low risk assets. And for the crypto space, Bitcoin is that low risk asset compared to Cardano, Matic, Solana. We've looked at the charts, we've seen how far they've all fallen, and we've seen them fall on their Bitcoin pair. And now I'm not saying Bitcoin is a safe or stable asset, but it's the most stable in the crypto space if you want to be exposed to potential upside risk. Now in a bear market, there's not much of that, and I would even advise against. I would hold cash during a bear market and wait for sort of times of capitulation to put money in. I would base it off time spent in the bear market over price, and using percentage moves like this. I think this tells a lot more than price. Anyway, that's a whole other thing. Bitcoin is the safe asset for crypto. So money moves into crypto as prices generally go down. And there's just less money in general as well. So already the money supply is shrinking that's in crypto. And the supply that's shrinking, what's in the altcoins, is also shrinking comparatively because it's moving into Bitcoin. So just something that I think is very important to know. Again, we've broken down below the support, potential to break down to here. Definitely. It all depends what happens in these next few days. I have sort of shifted my view from being potentially bullish on the Bitcoin Ethereum pair to being a bit more bearish. I think we could have a big drop in price in the next few weeks on this trading pair. I'm a little worried. But again, ultimately time will tell. I really, really don't know, to be honest with you. It's very hard to say. And again, when times are so volatile and it's sort of crunch time in both the amount of time we've spent in the bear market and the price range that we're at, it could either drop 10% in a day or it could just not, and we could stay at this level. and our bottom could be just some day where we dropped 5% and then we rallied back up to the prices that we were a week ago. It's difficult to put a stamp on it. But again, having a look at our regression line that we had a look at, we can say that maybe if we are going to put in a bottom this year, it could be around this 1200 range for Ethereum. That wouldn't be a bad price to pick it up at. If I have a go at drawing my own curve, please excuse me, I'll try line things up, but I doubt they will do very well. Something like this, we could see, you know, I mean, this is obviously a lot less accurate, I would say, but there's, on this curve, there's potential for Ethereum to come down to the 350 mark. I doubt this will happen. I don't think Ethereum will drop this low, but it is possible, you know, maybe it drops down to sort of a 600 level. Again, that's not kind of out of the range of possibility, but I do think, again, Ethereum is a strong asset, even if it's not as strong as Bitcoin. So even though it's going down on its Bitcoin pair, it's still holding up much better than the rest of the altcoin market. And I would not worry about Ethereum long term as well. I'm bullish Ethereum long term. I just think in these next few months, we're not going to see the best price action for the crypto space in general and for Ethereum. I think that about wraps it up, guys. I've said everything I want to say. If you like the video, please leave a like, subscribe to the channel. It helps me out so much. And please consider signing up with FairDesk. Again, it is a sponsored video, but it does help out the channel a huge amount if you sign up with the link in the description. Take care, guys. Peace.